Stock exchange, because as we get all revved up for earnings season, particularly bank earnings, let's find out what ETFs that you need to be watching. Bob Pisani has those in the ETF Edge. Bob.
Thanks, Brian. It's time for ETF Edge. We've got bank earnings straight ahead. Investors are laser focused on how the group will start off reporting season. JP Morgan, Wells Fargo kicking things off tomorrow. So what's the best way to play bank ETFs here? Joining me to discuss, Todd Rosenbluth, CFRA, and ETF consultant Chris Hempstead, former head of ETF sales for Deutsche Bank. Todd, so far this year, the bigger, the better, the big money central banks, center banks, and even large regionals like PNC and US Bank Corp are outperforming the smaller names. And the market cap weighted Spider Financial ETF is outperforming the equal weighted regional bank by about 5%. Look at that outperformance there. Why is this happening? Why are the big banks outperforming the smaller banks this year, and is that going to continue?
So the larger companies, which tend to be in more of the market cap weighted products like XLF, which is a Financial Select Spider, or the iShares Regional Bank ETF, you're going to have more diversification of the revenue stream. It's not as dependent upon loans and loan growth, but broader areas of revenue that you're going to have: asset management, wealth management, trading and capital markets. And so that diversification is going to help in a lower for longer interest rate environment.
Yeah, you're right. They do have trading operations, those big money center banks. Chris, we've got a low rate environment. Does a low rate environment somehow give a competitive advantage to a bigger bank, say, over a smaller bank? Is there any relationship?
It does. The bigger banks have a much deeper capital market structure that they can leverage for revenue that the regional banks don't have. So this persistent low market environment, the low rate environment, is going to favor the bigger banks.
What's amazing to me is even the regional banks is a bifurcation. They're getting bigger and bigger. If you look at the IAT, this is a market cap weighted of all the big regional banks. 5 banks are essentially half of the market weighting. US Bank Corp and PMC themselves are almost 30% of the weighting in these. Here they are. You can see what's going on. It's rather remarkable how big even the regional banks are becoming and dominating.
Yeah, and it highlights how important it is to look inside the portfolio. So that portfolio versus the other product from State Street, KRE, the regional bank-oriented ETF, which is equally weighted. Big difference in the number of holdings, big difference in the size of those holdings and the position. So roughly 2 or 3% of the assets in those larger regional banks, as opposed to 8 or 9%. You really got to look under the hood with ETFs.
Yeah, and we're always saying, do your homework, do your research. Look, IAT, if you want to play PNC and US Bank, that's the better ETF for you. Most people gravitate to KRE. There's nothing wrong with KRE. It's equal weighted. But people look at it because it has a higher volume. But tradability, IAT is right there with it.
Big difference between equal weight and market cap weight. We talk about that all the time. Todd and Chris, thanks very much for joining me today.